Intel reported first quarter 2023 earnings results that were pretty good in my opinion overall. However, I'm going to review those earnings results in this video, and at the end of the video, I'll answer if Intel is an excellent dividend stock to buy right now. So, without further ado, let's get into Intel's earnings. So revenue decreased by 36% to 11.7 billion. The huge fall caused a loss on the bottom line. The company reported a loss per share of 66 cents. That was a big turnaround from an earnings per share of $1.98 year over year. The two biggest areas of struggle for Intel are notebook sales, right? Laptop sales, sales to companies that use Intel's semiconductors inside laptops. That was down to 3.4 billion from 5.9 billion in the same quarter the prior year. And then the second headwind is in the data center and AI segment, which is down to 3.7 billion from 6.1 billion in the same quarter the prior year. So let me take each of those two one at a time. The notebook sales is totally understandable and predictable. You can imagine that a lot of people bought laptops in 2020 and 2021 when they were forced to learn from home and work from home. That created a big surge in sales of laptop computers. And when you buy a laptop computer, you typically don't replace it for, I don't know, 4, 5, 6, 7 years. According to Intel, the average replacement is 5 years. So it takes people 5 years to replace a laptop once they buy it. So, given that so many people bought laptops in 2020 and 2021, you can expect laptop sales to be down significantly for the next couple of years until 2025 when that replacement cycle starts to come back. And in those years, you can expect a boom in laptop sales. You can expect a boom in 2025 and 2026 because that's when those laptops bought in 2020 and 2021 are going to start to need to be replaced. And there is a lot of them that were purchased during that time. Now, in the first quarter, the Wall Street Journal had a report earlier in April that highlighted in the first 3 months of the year, computer sales overall were down 30%. 30% they were down. So this is an industry-wide phenomena, and Intel is going to face headwinds in this segment for a couple of years. Sales are going to be down. You can expect that in this segment. Um, so don't be surprised about that if you're looking at Intel stock. Now, the next segment, data center and AI, being down to 3.7 billion from 6.1 billion, and most of that decrease is in the data center segment, not the AI segment, because we all know AI is booming. So the data center segment is the one that really brought down revenue between those two, and that is more temporary. That is a result of enterprises being more cautious because of the macroeconomic uncertainty right now. The Federal Reserve has raised interest rates by nearly 500 basis points, and that's causing an economic slowdown. So enterprises are pulling back spending. That is more temporary. That's not going to be a headwind until 2025 for Intel. That might recover in the third quarter of this year, or the fourth quarter of this year, or the first quarter of next year. So that's more of a short term headwind that I suspect will rebound, not in the second quarter, but maybe in the third quarter, more likely in the fourth quarter, and then even more likely in the first quarter of next year. So Intel is cutting costs to better align the business with tougher macroeconomic conditions. Marketing and general and administration expense was down to 1.3 billion from 1.75 billion. R&D was down to 4.1 billion from 4.36 billion. So I like that response from Intel. The industry is slowing down. our sales are slowing down. We've got one part of our business that's going to be slow for a couple of years. So let's bring costs down. I like that. Very reasonable response. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Cash flow from operations actually increased to 983 million. That was an improvement from a loss of 2.2 billion in the same quarter the prior year. This area, inventories, I was a little disappointed to see that they barely dropped from December. Inventories were down to 13 billion from 13.22 billion in December. I would have liked to have seen a bigger drop in inventories, but that's not entirely up to Intel. They already took down prices and their gross profit margin already fell. So there isn't much room for Intel to cut prices even more to get rid of this inventory. And much of the inventory is raw materials and work in process, so it's not even finished goods yet. So I'd like to see Intel ideally work that inventory down, um, be leaner in these uncertain macroeconomic times, because it's not just Intel that's experiencing a slowdown, right? It's an industry-wide slowdown, and industry-wide there's an inventory glut in these types of items, in these semiconductors, in electronics. So I'm starting to see it from other companies starting to bring down inventories. It's going to take some time to work through. The company borrowed $11 billion in the quarter to stem the tide until the business rebounds. I think that was a smart move also. You don't know how deep this decline might go. We still have not entered an economic recession, and you don't know how bad that recession can be. And if you're Intel, you don't want to wait until things get worse to go out and try and borrow money, because then the costs to borrow that money are going to be significantly higher. So taking this step now, shoring up the balance sheet, making sure you've got this cash on hand, is a smart move. So overall, judging management's decisions, I think their response is solid to the scenario they find themselves in right now. They're forecasting second quarter revenue of 12 billion at the midpoint and another loss per share of 62 cents. So second quarter is going to be more pain for Intel stock investors. The turnaround not likely to happen until the third quarter at the soonest, although I would be more inclined to think that it's going to be closer to the fourth quarter, if not in the first quarter of next year. So with that being said, is Intel an excellent dividend stock to buy right now? I mean, you could. The stock is not expensive. The stock is trading at reasonable valuations. Although with the pain expected to continue throughout the second quarter, I would wait as an investor for these next 3 months before I buy the stock, right? Because you get yourself some insurance in case the economic slowdown, you see it worsening. You know that's going to impact Intel, and you know that's going to slow its recovery, and you may be able to get it at a lower price if the economic slowdown worsens or happens in the second quarter. And there are very few catalysts that will boost Intel's prospects in the second quarter. Enterprises are not all of a sudden going to say, okay, it's blue skies ahead. Let's go ahead and start investing in our data centers. Let's start buying, let's start making our investments again. That's unlikely to happen in the second quarter. Enterprises are cautious. They're waiting to see where the economic slowdown ends, or where does it bottom out. And we're not going to see that in the next 3 months. We're not going to see the bottoming out of the economy, because it's still on a pace of slowing down, and the Federal Reserve is still raising interest rates. They're still expected to raise interest rates by at least 0.25% in their meeting in May, which is going to cause a further slowdown in economic activity. All right, so for all those reasons, I think it's more prudent to wait before buying Intel stock as a dividend stock investor. All right, so that's all I've got for this video. Thank you so much for watching. If you appreciated this, I've got a lot more earnings reviews, buy and sell recommendations, my top stocks to buy. I provide all those videos for free on my channel, so I recommend you subscribe if this is the kind of content you like to see. Thank you so much for watching, and I really hope I will see you again soon.